Live? Oh my gosh. Are we really for real? Oh my goodness gracious. That was painful. All right. I think
Hey,
we're live. I think we're live though. Steve, are you live?
I'm here, man.
Oh my
It's
gosh.
been a long week. I'm glad to be back. I missed you guys, as I always do.
Who said it in the chat? To take a week off and look what happens. Yeah. A few
I
days
did.
off and look what happens. Oh my gosh.
It was all
You
on
would
me. Uh,
you would think we've never done this before, but we're here. All right, everyone. What's up? It's CRL Short Request Live. We haven't done the show for a couple of times now, so we got a kind of a backup of tickers here. So let's start. I was keeping track of all the tickers people were emailing us, so let's just start going right now. Steve, you ready?
yeah, I just want to say, like, today will be fun for me too. And just as a disclaimer, like some background, we've been away for a couple days now,
Yeah,
and I haven't been on top of my charts.
yeah.
So, we'll figure out these trends together. But I don't really know what's going on the past day or two.
Dude, you and me both. Okay, so
Right.
all
This is
right, let's
fun.
let's start with Amazon from Eric Johnson.
Good one. Yep.
Yeah, nice broad macro stock.
So Amazon and Google have been the mega cap tech names that we've really been interested in internally. We've written about these names over the past few weeks, I would say. Google, look at this, right? I think it is time when you have charts that look like this in something like Google, right? Where the reversal pattern just completed and we're now heading higher. This looks far more attractive than something like Apple or Microsoft, right? Where this base completed a long time ago. We ran higher, right? And then we failed at this critical level of overhead resistance. Okay. So Amazon falls into the same category or basket as something like Google, where we endured a pretty hefty drawdown off the 2021 highs, and we're just now completing this base, right? So this base here is something similar to the bases that we saw complete in Nvidia, Microsoft, Apple, right? Stocks that have already run back to their former highs. Amazon, this is a fresh breakout. So this is one of my favorite names right now. If you are bullish on the mega cap tech theme or mega cap growth theme, I don't think there's a better opportunity right now than Amazon on this bullish resolution above, let's call it 145, with a target of, it's really those former highs, say 190, 185.
Yeah.
But this is, I just want to be so clear about this. This is a great vehicle. It's one of my favorite vehicles right now for this theme.
That theme being mega cap growth.
Yes.
Yes. Okay. Okay. Let's move on. Joseph Briggs asked us about Uber.
Yep.
I spent in the last week, in the last like not even week, like 5 days, I've probably spent, I don't know, $250 on Ubers, $300 on Ubers, probably 300.
All right. Spencer, I spent $210 on an Uber this morning, and I got to tell you, it's tough because from the Miami airport getting to Key West, I slept in the backseat of the car. I'll be completely honest. I snoozed on the ride home, but I had 3 Ubers pass me because they don't want to do that drive because then they get stuck down in Key West and they have nobody to take back up to Miami. It's a huge waste of time.
So I have a similar problem, not quite that bad.
Yeah.
But people don't want to go into Jersey. When you're in New York, they don't want to go into Jersey.
Common theme out there.
Yeah, it's true. Okay.
But no, let's talk about, really from a fundamental perspective, Uber is as exciting of a story as anything right now, I think, right? Like this is one of those, for me, investing can be easy situations where it's a company, it's a brand, it's a service that we all use a lot. They're doing everything right from a fundamental or a financial perspective. The chart looks great. The base breakout is intact. The leadership is there. It really checks all the boxes. I also just love the management team and the leadership over at Uber and what Dara's done over the past year or two. This is one of my favorite setups right now. I really love this. Amazon, now Uber. I love both of these names 48 is that level for me. You can get confirmation at the pivot highs, which are about 49 and change. And then you're going to run it back to the highs from early 2021, get you about 63 and a quarter.
Okay.
And then from there, hold on. I mean, from there, I don't know what it's always helpful, Spencer, if they give a time frame, right?
Because that is, yes, of course. If you're going to drop us a request, it would be the most helpful if you could say whether your bias is long or short and what your time frame is.
So with something like Uber, like once we get to 63 and a quarter, you might look at that and say, okay, that's less than $20 of upside. I'm getting, whatever it is, like 40% here on this trade. No, this is a bigger picture setup here where if and when we do take out those highs, that's when the real trade is on back towards like 90. So I like Uber long-term. I hold it in my retirement account. I plan to hold it for a long time if it continues to show leadership and keep trending higher. So 63 and a quarter, first stop from there, 90.
I'll say this, when faced with the need for a ride share, I used to just price check Lyft and Uber against each other, and now I don't even go to Lyft anymore. Just because I've had enough experiences where Lyft is more expensive by a mile that it's not even worth it for me. So
and the stock prices reflect that kind of sentiment, right, Spencer? It seems like the winner has been crowned in this space, and I don't know, what that means for the future of Lyft. There's probably niche markets that they can still, compete in and do well in, but these have become two very different businesses. There was a time 3 years ago where it looked like Lyft had a really good shot at competing. I don't feel that way today.
Okay, my hot take: by the end of the decade, Uber will acquire Lyft. Let's move on. Wavy is looking to short a couple of stocks to their COVID lows. He's looking to short UPS or Macy's to both respective COVID lows. So whichever one you want to look at.
Wavy, you should slip into my DMs. I would love to talk. You have a bearish tilt.
You know what though? Right? He does. Yeah. But not in an he's not obnoxious about it.
No, listen. No. I could listen. I don't I see what you're doing, Wavy, and I like it, right? You're clearly macro bearish, but you're expressing it in the right way, where every time you come on here and recommend a stock that you're looking to short, it's a clear laggard, right? So like in the case of Macy's right now, this is the absolute trend, but I'll show you the relative trend if you want to see what I mean. This is an underperforming stock, right? So you got in the relative trend, pretty clean top here, right? And this is a weekly line. You draw something like this. The top is completed. That's the arc headed lower. And when you flip to Macy's on an absolute basis, what you want to do really, if you're looking to short stocks in a tape that might not be super conducive to shorting stocks, which is what you're doing, you definitely want to make sure that you're banking on laggards, but also that you're defining your risk in, very careful and conservative way, right? You want to know if I'm wrong on this trade, maybe I lose $1 or I lose something, that's very well defined and I know where I'm out. And if I win, okay, I'm 30% or something. And Macy's here, to me, the short was right here. The short was at these pivot lows. You can see the price reaction on earnings, right? You got the pivot lows here from September of 2022, a little shake lower earlier this summer, back above, and then you got this monster gap here.
That was an earnings gap. That was.
Right?
I think.
So that's the market reminding us like, hey, this level's still important. I think you want to short Macy's here at about 15. We're at 11 now. I don't know. This is a tough one. For me, I wouldn't know where to get in on this trade. Okay. But I'm with you. If you're looking for stocks to short, you want a name like Macy's. What's the other one?
UPS.
Yeah. Okay. A little better. You got a nice clean shelf here, right? Market continues to reinforce the importance of this level. Okay. I like this one. This is what the kids would call a head and shoulders top. Right?
I see I see 4 heads of 5 shoulders.
again, we don't draw them perfectly, as you know, Spencer, right? So for me, this is a distribution pattern. It's a top. But I could draw shoulders here. You don't think I could draw shoulders here? Look at this.
No, I didn't say you couldn't.
So the thing with the head and shoulders, like the way that the textbook will teach it, is simply that there has to be a neckline, right? So it's more about the primary trend. It has to be a head and shoulders pattern is always a reversal pattern. That's the most common mistake that's made about it. It's never a continuation pattern. Head and shoulders is only a continuation if it fails, right? So we have the primary trend higher here, and then this big distribution, right? So the reversal pattern is shown very clearly here. And then you have a neckline that you could ultimately draw a trend line through, which is right here, right? So this would be the neckline. And then you have your left shoulder,
your
head, and then your right shoulder. And see how you have this touch here at the neckline, and then these touches over here at the neckline, right?
Yeah, I mean, yeah, I see it. I also see like,
and I'm with you. I think it's like, I don't know, like a fool's errand to go and be like, oh, it's a head and shoulders. It's a top, right? Because a head and shoulders is really just a top at the end of the day. And this topping structure is shown very clearly here. Another thing we look for when identifying like big reversal patterns is the long-term moving average, right? So you see it sloping higher here in blue, telling us the primary trend is higher. And then it rolls over, flattens, and looks like it's ready to head lower, right? So that's one thing we look for. And then momentum would be the other thing. So I'll flip back my other format here. And there you go. You got that oversold reading. I got momentum really big down here in the lower pane. Oversold in August, oversold again in September, not overbought, right? On the corrective wave back in June and July. This is a bearish momentum regime. I like this one as a short.
Okay. All right. For Gerbier, let's look at Tesla. I assume he's bullish. I think most people look at Tesla.
Yeah.
All marked up.
It's sloppy, right?
Yeah. But that's what Tesla is, though. We've talked about this, right? It is usually sloppy, except for like that for 18 months. 18 months it was straight up, right? But usually it's sloppy.
So here's what I do. Like in a situation like this one wouldn't be an individual ticker that I would say, oh my God, what a great vehicle. Simply due to the messy price action, right? I want clear levels where I could say, oh, we had a touch here in August and we got a touch here on a year-to-date basis and now we're breaking out. No, I have to draw a diagonal trend line here, which are far less effective and less reliable than horizontal trend lines, right? So for me with Tesla, the essence of the pattern is it is a reversal, right? If I threw a long-term moving average on this chart, it would show that. You would see it starting to curl higher here. But the question becomes like, where do I get long? So like, if you're just itching to get into Tesla so bad, you would have to use these pivot highs here from July. So that would be about 300. And then I would trade it right back up to the old all-time highs, just above 400. But again, there's no setup that is like, screaming at me right now, like, oh, this is the level. It's very messy.
Here's one that John asked us about Power PWR. This is Quanta Services. This we talked about this one. Actually, I don't think you and I have, but I've talked about this with Pat for sure. This thing is just an absolute monster. Look at this thing; it's a monster.
Been talking about this one for years for that reason.
Yeah,
because these secular leaders, which Quanta certainly is, pop up on our scans over and over and over again. Small dividend here. Engineering and construction,
very small.
30 billion cap. This is one of those industrial names that you don't hear much about. It's probably pretty closely held, not covered by analysts. Provision of comprehensive infrastructure solutions, oil, gas, communication industries. All right, listen. The point is, with a trend like this, you just want to identify levels logical levels to get in, right? So I could draw a big base here and this breakout, which happened, several years ago. Now we can fib this out and hope to get some sort of level to trade against. Kind of shows us smack in the middle of a range. Look, this is another tough one. I think you have to be super tactical. The fib's not giving us much. This one's just kind of slowly dripping higher. Maybe it's a buy weakness setup. Again, don't know the time frame. But if you were more tactical,
that looks cleaner, yeah.
The market is telling us over and over and over again, just since late July, that this level is pretty key right here around 200. Also, big psychological level. Just ran back here on just yesterday.
Yeah,
touchdown, a nice little lower shadow, and an inside day today here. I think you could, for something short term, play this one off of 200.
Off 200. Okay. For Dan, CDNS Cadence Design Systems, a $65 billion software company.
Yeah. This is another one. I mean, look, Spencer, when you zoom out on something like this, again, let's just throw up the relative trend here to illustrate what I mean. Secular leader. It's one thing to chart a stock on an absolute basis, right? And for it to be heading straight up and to the right. When you benchmark that stock or show it relative to something like the S&P 500 and it's still straight up and to the right, listen, the S&P 500 is one of the greatest indexes of all time. All it does is go up when you zoom out. So if you look like this relative to the S&P, it's a really good place to be. So what do? We want to zoom in and look for logical levels of interest where we can define our risk and get long. So something like Cadence, we could draw a little tactical fib here from the 2022 highs and lows. We got this nice little shelf here where we're consolidating. I'm just going to be lazy and draw a rectangle here, right? So you got the 161 there around 230. I think you get confirmation right here at the pivot highs, and you can play it to the 261. So above 247, call it. If you really want to be precise, you could zoom in and find the closes from these candles, right? It would be the close from right here earlier on in the month. 246.70, buy strength. And then you got the 261 at 290 as your target.
All right, that's nice. What about Pure Storage, PSTG? Not a physical storage play. This is a play on virtual storage software.
Yeah, I like this here. I think this is it.
I always confuse this one with PSA, public storage, for some reason. I mean, they both have storage in the name. Maybe that's why.
Oh, one is tech and the other is real estate. So
right. I know they're very different.
Right. So this is software. I don't know what they do. Oh, it's electronic technology. I thought
it's cloud. It's cloud.
Oh, it's cloud. Okay, I thought so.
Yeah.
Yeah, storage. Right. So look, you got some sort of a base here, kind of a slow mover for a cloud stock. But you have a clean level here, right? So if you zoom in, you got the 2022 peak, which is now, it was resistance, right? Just back here earlier last year. Saw this level act as resistance. Now here today, it is acting as support over and over and over again in this region right here. So I think you can buy this weakness over the past few days towards this 36 level. And then you would want to fib it out or target. And it would look something like that. 45.
All right, nice clean level. All right, this is a good one from Scott. Scott bought NOG. He bought it before the gap up last Friday. He wants your opinion, and that's all it is, an opinion on an upside target in NOG. I like this because it's a little bit different. He's already in. He's not asking us where to get in. He's asking, if you were in, where would you think about getting out?
So listen, I like it. I like the question. I like the way it's framed, right? When we talk about the essence of a pattern, for this one, it's really clear, right? You have the downtrend coming in from the highs in 2011, right? Nasty downtrend. The stock was trading $300 a share 12 years ago, all the way down to $3. And then you got this beautiful reversal pattern, which has literally taken 7 years to complete, right? And it's still completing right now. So maybe you jumped it a little bit, which I'm more than okay with in this environment, especially, you know, when you consider like the intermarket themes, energy leading, these stocks doing well. I think this base definitely eventually completes higher. For me, the level is about 44. We're trading around 41 today. Again, you can jump it. 44, I think, gives you that confirmation. It's these August or actually October. Yeah, October highs at 44. If and when we take them out, for me, patterns like this, just measure the base, right? So 43 is the upper bounds of this base. 3, that's the lower bounds of this base. So you measure it up by that space, which is $40. Breakout level of about, what did we say, 44. Tack 40 onto it. That gives you a price target of about 84, which is really not much, right? That's just an early target for me, but it gives you a double from here, right? So it's not bad, and it's very attainable. So love this setup. Think you are a little bit early, but that's okay.
All right, let's do like 1 or 2 more since we started a little bit late here. H Chan asking about Weight Watchers. I'm not sure what this says about me, but over the last week or so, I've been getting a lot, like a shit ton of ads on Reddit for Weight Watchers. I don't know.
What's the ticker now? It used to be WTW.
It's now just WW. I don't know what I clicked on to make them think that I want Weight Watchers. I don't, but they will not stop serving me ads. And in any case, this stock has gone from 3 to 11 year to date. So pretty good. But this stock does that. This stock has some wild moves over the years.
This has become a story stock.
Yes.
A hot stock. There's always a new thing or a drug or Oprah did this. So not really my kind of stock, but you have a clean level here. Just like we talked about with NOG and a couple other charts today. There's a very clear reversal pattern setting up here. I think you get this confirmation above these pivot highs here from July, $12. We're at 11.75 now. So this is one I think you can get behind, like right here, right now. You got the first fib retracement of the drawdown from the 2021 highs coming in around 1750, and the second fib at 26. And I really think you can ride this one all the way back to the all-time highs. If this reversal...
Wait, what?
Yeah. No, I'm sorry. The 2021 highs, not the all-time high. If this reversal is valid, right, you tend to retrace all the way back to the former highs, and that would be about $40.
Okay. All-time high, I believe, is 105.
It's a nice chart. I hate the name, though. It's I think, Spencer, you gave like the perfect disclaimer for a stock like this. There's just always something.
Dude, in 2016, Oprah invested and joined or 2015, she invested and joined the board. I don't know when it was, actually, honestly. It was one of those years. And this thing went parabolic, honestly. It
like
was
right here. Yeah. I'll bet you it was October 15.
Yeah, that may have been it. Yep.
Look at this polarity, Spencer. Look at this polarity, right? So going back to where you're talking about when, you know, Oprah came and I guess saved them for the time being.
Yeah.
We came right back on the recent bear market.
Oh man,
touchdown at those same lows from 2015, just textbook retest, and that's where this reversal pattern began to form. So,
okay, I think that's a good place for us to end it today. We appreciate everyone's patience bearing with us. Yeah. So, Chart Request Live, we're back. Hey, we're back in the swing of things. Steve, did you all like get sick over there? Because several of you have told me today that you're not feeling well. Is it just you're jet lagged or like?
Dude, I feel bad. It was me this time.
You got everyone sick? I'm glad I wasn't there.
I think it was me this time because I was coming from Connecticut where I had a whole thing with family and people were sick up there. And I think I got it up there and took it to San Diego. We have like a history of, we're a remote company, but I can't tell you how many times the All-Star Charts team has infected other members of the All-Star Charts team with COVID. Like we get together for these little trips and it's like every time we can't do it without people getting other people sick. And it was, I'll take the blame this time around. I think I was the one. So,
all right. Well, I hope you're feeling well enough to join us tomorrow on the morning show because we are back for that as well. So between now and then, everyone, have a good rest of your day. Go make some money. Hey, smash that like. I'd appreciate it. Subscribe to our channel if you're not already. Check out our site, stockmarketmedia.com. As always, put your requests in email and we'll get to those first. Questions at stockmarketmedia.com. That's a wrap. We'll see you guys tomorrow. Have a good one.
Later.